financing of social projects in India, the development projects, is very difficult in India, in the Indian context. We see we don't have much fund for such activities, developmental projects. Now, this funding gap, what we have, this capital gap, how to address that? Social projects are largely, we see, are government driven and not much output, or in fact, due to lack of fund, not much commercial management or efficient management and result oriented has been observed in the Indian context. And for that, there has been proposals to create a blended finance solution, blended financing. Here, what can be done to finance these socio-economic developmental projects? Capital needs to be amassed from different sources. That includes the philanthropic capital, the public capital, and the private capital. And that capital is judiciously, efficiently deployed on these socio-economic developmental projects. Now, the different capitals what we have amassed is being deployed at different risk parameters, let's say. So here the idea is that we have social capital which are looking for lower returns, philanthropic capital and impact investment capital, and the public money as well. Whereas at the same time, for the same project, the structuring is such that the commercial funds are attracted in that pool, which are ensured their commercial returns as per the market. And that provides a capital for a good capital for investment in a particular project. So this blending of finance from multiple sources can prove to be addressing this finance gap in socio-economic developmental projects in India. There are ways to create this structure, this solution. One is when the government or developmental agency create a catalytic funding wherein they put in their money and for absorbing the risk, or let's say for a lower return, and the commercial funds are attracted in the same project for their adequate return. So that kind of setup is one to make this happen, this project to go ahead, social project. Another could be that the government fund or the social fund is something which is used to address the risks of a particular project wherein the commercial fund is being attracted. So the risk is being addressed through insurance or other means, which is being settled partly by this social fund. So that is another way. Third is the support mechanism can be provided by these social fund for the commercial fund to address a particular project, and some part of it which is not providing the return or which is the initial activity or some research activity can be taken up by this social fund. So that way also a solution can be, a blended finance solution can be created. Another is wherein the result oriented, what we call, wherein the commercial fund provides the result on a particular social impact project, and based on the result they have provided, milestones they have achieved, the government fund is unlocked to give them as a reward on their risk taking and yielding result. So these are broadly ways in which financing can be blended and raised for these socio-economic developmental projects, which are largely in huge financing deficit and are unable to grow. So that is the way to address. Now here we need to create this ecosystem of blended finance wherein we can design, structure and execute this entire blended financing solution for socio-economic developmental projects. And for that, government needs to provide a proper regulatory environment wherein the disputes are resolved and uh, fairly, and other ecosystem is provided for the players to come and the money to be unlocked, the commercial funds to be unlocked for these sectors. So that is the approach what blended finance can provide, and the solution what blended finance system can provide. Thank you.